is Petronas and Sinopec. So the background of Petronas. Petronas short form for Petroleum Nasional Berhad, which is National Petroleum Limited. It is a Malaysian oil and gas company that was founded on 17 August 1974. Fully owned by the government in Malaysia, the corporation is vested with the entire oil and gas resources in Malaysia, and it is entrusted with the responsibility of developing and adding value to these resources. Since it is incorporation, Petronas has grown to be an integrated international oil and gas company with a business interest in 35 countries. The group is engaged in a wide spectrum of petroleum activity, including upstream exploration and production of oil and gas to downstream oil and refining, marketing and distribution of petroleum products, trading, gas processing, liquefaction, and many more. Next, background of Sinopec. Sinopec Limited was established as a joint stock entity under the China Petrochemical Corporation Group, Sinopec Group, in February 2000. Sinopec is a Chinese oil and gas enterprise based in Beijing, China. It is listed in Hong Kong and also trade in Shanghai and New York. It is the world's largest oil refining, gas and petrochemical conglomerate and headquartered in Chaoyang District, Beijing. Sinopec business include oil and gas exploitation, refining and marketing, production and sales of petrochemical, chemical fiber, chemical fertilizer and other chemical product storage and pipeline transportation of crude oil and natural gas, import-export and import-export agency business of crude oil, natural gas, refined oil product, petrochemical and other.
Hi, my name is Fitrah Nabila binti Norhamdi. Okay, next we go to the definition. Definition: exploration for an evaluation of mineral resources mean the search for mineral resources including minerals, oil, natural gas and similar non-regenerative resources after the entity has obtained legal right to explore a specific area, as well as the determination of the critical feasibility and commercial viability of extracting the mineral resources. Exploration and evaluation expenditure are expenditure incurred in connection with the exploration and evaluation of mineral resources before the technical feasibility and commercial viability of extracting a mineral resources is demonstrable. Next, MFRS recognition. When the developing its accounting policy, an entity recognizing exploration and evaluation assets shall apply paragraph 10 of MFRS 10 accounting policy, charges in accounting estimate and error. Based on paragraph 10, in the absence of a MFRS that especially applies to a transactions, other event or condition management shall use its judgment in developing and applying an accounting policy that result in information that is A. relevant to the economic decision-making need of users, and B. reliable in that the financial statement. We have 5 from this B. Number 1 is represent faithfully the financial position, financial performance and cash flow of the entity. Number 2, reflect the economic substance of transactions, other events and conditions, and not merely the legal form. Number 3, are neutral, for example like 3 from bias. Number 4, are prudent. Number 5, are complete in all material respect. Based on paragraph 11 and paragraph 12 of MFRS
11, in making the judgment described in paragraph 10, management shall refer to and consider the applicability of the following sources in decreasing order. A. The requirement in MFRS dealing with similar and related issue. B. The definition, recognition criteria, and measurement concept for asset, liabilities, income, and expenses in the framework
of MFRS 108. In making the judgment described in paragraph 10, management may also consider the most recent pronouncement of other standard setting bodies that use a similar conceptual framework to develop accounting standards. Other accounting natural and accepted industry practice to the extent that these do conflict with the sources in paragraph 11. Based on Petroleum National Berhad Petronas, based on Annual Report 2017, the preparation of financial statement in conformity with MFRS require management to make judgment, estimate and assumption that affect the application of accounting policy and the reported amount of asset, liability, income and expenses. Actual result may differ from this estimate. Estimate and underlying assumptions are reviewed on an ongoing basis. Revision to accounting estimate are recognized in the period in which the estimate is revised and in future period affected. Revenue from sales of oil and gas and other related products are recognized in the profit or loss when the risk and reward of ownership has been transferred to the buyer.
I'm Alia Qistina from Zamhuri, and here I will proceed to FAR560 recognition. Temporary exemption from IAS paragraph 11 and 12 when developing its accounting policies. An entity recognizing exploration and evaluation assets shall apply paragraph 10 of IAS 8 accounting policies changes in accounting estimates and errors. And here we can see A, relevant to the economic decision-making needs of users, and B, reliable in that the financial statements 1. Represent faithfully the financial position, financial performance and cash flows of the entity. 2. Reflect the economic substance of transactions, other events and conditions, and not merely the legal form. 3. Are neutral, in example free from bias. 4. Are prudent, and 5. Are complete in all material respects. Next, in making the judgment described in paragraph 10, management may also consider the most recent pronouncements of other standard setting bodies that use a similar conceptual framework to develop accounting standards, other accounting literature and accepted industry practices to the extent that these do not conflict with the sources in paragraph 11. Here we could see that both MFRS 6 and IFRS 6 are the same. Next, Sinopec Corp. This is based on annual report of Sinopec Corp in 2017. Revenues associated with the sale of crude oil, natural gas, petroleum and chemical products and ancillary materials are recorded when the customer accepts the goods and the significant risk and rewards of ownership and title have been transferred to the buyer. Revenue from rendering of services is recognized in the consolidated income statement upon performance of the services. No revenues is recognized if there are significant uncertainties regarding recovery of the consideration due, the possible return of goods, or when the amount of revenue and the costs incurred or to be incurred in respect of the transaction cannot be measured reliably.
Okay, my name is Norabiatul Adawiyah binti Zubir. We proceed to measurement. Okay, under MFRS 6, measurement of the exploration and evaluation asset shall be measured at cost. Second, element of cost of exploration and evaluation asset may comprise of A. Acquisition of right to explore, B. Topographical, geographical, geochemical and geophysical studies, C. Exploratory drilling, D. Trenching, E. Sampling, and F. Activities in relation to evaluating the technical feasibility and commercial viability of extracting a mineral resources. Paragraph 10. Expenditure related to the development of mineral resources shall not be recognized as exploration and evaluation asset. The Framework 1 and FAR560 138 intangible asset provide guidance on the recognition of asset arising from development. Paragraph 11. In accordance to MFRS 137 provision, contingent liabilities and contingent asset, an entity recognize any obligation for removal and restoration that are incurred during a particular period as a consequence of having undertaken the exploration for and evaluation of mineral resources.
Assalamualaikum, my name is Mohd Syazmi. In accordance to IFRS 6 measurement after recognitions, paragraph 12, after recognition, an entity shall apply either the cost model or the revaluation model to the exploration and evaluations asset. If the revaluations model is applied, either the model in IAS 16 property, plant and equipment, or the model in the IAS 38, it shall be consistent with the classifications of the asset. Sinopec Corporation's oil and gas property include the mineral interest in properties, wealth and related support equipment arising from oil and gas explorations and productions activity. The acquisition cost of mineral interest is capitalized as oil and gas property. Cost of development wells and related support equipments are capitalized. The cost of exploratory wells is initially capitalized as construction in progress, pending determinations of whether the well have found proved reserve. Exploratory well costs are charged to the expense upon the determinations that the well has not found proved reserve. Capitalized cost of proved oil and gas properties are amortized on a unit of production method based on volume produced and reserve. The group estimates future development costs for oil and gas properties with reference to the engineering estimate after taking into consideration the anticipated methods of dismantlement required in accordance with the industry practice. This estimate the future dismantlement cost discounted for the credit adjusted risk-free rate and are capitalized as oil and gas properties, which are subsequently amortized as part of the cost of the oil and gas property. Oil and gas property. The group used the successful methods of accounting for its oil and gas producing activity. Under this method, cost of development wells, the related supporting equipment and proved mineral interest in properties are capitalized. The cost of exploratory wells is initially capitalized as constructions in progress, pending determinations of whether the wells has found proved reserve. The impairment of exploratory wells costs occur upon the determination that the well has not found proved reserve. The exploratory wells costs are usually not carried as an asset for more than 1 year following the completion of drilling, unless the well has found a sufficient quantity of reserve to justify its completion as producing well if the required capital expenditure is made. Drilling of additional exploratory wells is underway or firmly planned for the near future, or other activities are being undertaken to sufficiently progress the assessing of the reserve and the economic and operating viability of the project. All other exploration costs, including geological and geophysical costs, other dry holes costs and annual lease rentals are expensed as incurred. Capitalized costs of proved oil and gas property are amortized on the unit of production method based on volume produced and reserve.